Good afternoon everyone, hope you are all doing well and welcome to the next part of the educational series. Now today we're going to be covering candlesticks, what they mean, what they show and how you can trade based off what you're seeing on your charts. Now already in the educational series we've covered the absolute basics of how to set up your trading view site, we've showed you how to set up your charts, how to begin analysing them, some basic strategies such as support, resistance, channels. We've gone through some indicators, but now we're going back to basics and we're going to cover the candlesticks, what they mean, what they show and how you can trade them. And we'll get into some candlestick patterns and some strategies and how you can basically combine everything you've learned so far all together and use every single strategy as one to get the best possible entries and the best possible trades so you are consistently profitable in the Forex market. So anyway, without further ado, let's get into it. So what is a candlestick? So this is what you've probably seen on your chart so far and you're probably thinking, what does all of this mean? What does it show? Now we have a range of green candlesticks and red candlesticks. Green obviously means price is rising, red means price is falling. Now what these candlesticks show is a different thing. So obviously what we have are many different time frames on our charts which you can choose to set to whatever you like. If you set your charts to say a 15-minute time frame, then each of these candlesticks will be worth 15 minutes in time. If you set it to an hour, then these candlesticks will show an hour's worth of price movement and so on and so forth. So anyway, let's dissect these candlesticks and see a little bit more about what they mean and what they show. So on our green candlesticks, which showing price rising, this is where price starts. So on the hour, on the dot, so 1 p.m, 2 p.m, 3 p.m, when the new candlestick opens, this is where price will start. And then the wicks show the lowest point and the highest point price has been within that hourly time frame or whatever time frame you're viewing the charts on. And then obviously the top of the body of the candlestick is showing where price has then closed, ready for the next hourly candlestick to begin formating. So what we can see here is there's many different shapes and sizes of these candlesticks. The smaller ones basically mean that price opened here. This was the lowest point price went in the hour, and then by the time the hour closed, it finished up here. And this was obviously the highest point just at the top of this wick, and then the next hour started. Price started here. This was the lowest point price moved within the hour. This was the highest point price moved within the hour, and then this again was where the next hour then started and where it finished. So obviously we can see here when this candlestick opened right on the dot of the hour, whatever time it may have been, this is where it started, this was the lowest point, and then we had a massive surge in price showing that obviously buying momentum is really kicking into the market. But again, we're going to cover this shortly later on in this video. So it works the same but in the inverse direction with the selling bars. So the bearish candlesticks, we have the open at the top, obviously the close lower than the open to show that the price has been falling, and then obviously the wick showing the lowest price has been within that time frame and the highest point price has been within that time frame. So as we can see here as a little example, we had two buying bars. This is where the candlestick finished. The next candlestick opened here, and then we pretty much didn't really get any wicks on this one. Price consistently fell down, closed right here, and then the next hour started, and then the next candlestick started forming. So anyway, what are the patterns of these candlesticks and how you can trade them? What do they mean? So here are some examples of a bullish inside bar. These basically suggest bullish momentum in the market, so a potential reversal or continued buying coming into the market to force price up. So have a little look at these, make a note of these if you want, print screen this and have it there for future reference. But the next example we're going to look at, in my opinion, is the most significant, and this is the bullish engulfing bar. This is basically when the candlestick completely engulfs the previous candlestick. So this is a bullish engulfing bar, basically meaning buying. So this is where the green bars completely engulf the previous candlesticks, as we can see here. The body and the wick is completely engulfing the previous candlestick. Pretty much the same here. But absolutely here and absolutely here and again here. It's quite easy to see. So we've got a bar that completely engulfs the previous bar or the previous candlestick. Here's it in action. So as we can see, we've had a clear price descent, and then we came to the bottom here. We had this big bullish engulfing bar completely engulfing this previous candlestick, and then away price went on its merry way back up. This is known as a hammer bar. This is showing a reversal in the market. This is basically showing that price has been forced all the way down within the hourly time frame. Let's assume these are viewed on an hourly time frame, so each of these candlesticks are worth an hour in time. And as you can see, the next hourly candlestick started here. Price was forced all the way down to the bottom of this wick, and before price had a chance to continue further, before the hour was up, price was then pushed all the way back to pretty much where it started, and then the next candlestick opened here. Now this is a very telltale sign that there's going to be a reversal happening in the market. After continued sell-off here, buyers have forced the price back up, and then as you can see, price has then continued its increase. So bearish signs in the market, so signs that the market may start descending, maybe reversing after a big bullish run or whatever. These are the candlesticks to bear in mind. So again, print screen this, have these for future references. These are all telltale signs that the market could be beginning its descent. So again, just like a bullish engulfing bar, we now have a bearish engulfing bar where a completely red candlestick is engulfing the previous candlestick, whether it's another red candlestick, whether it's a buying candlestick or whatever. As long as the red and the wick completely engulfs the previous, then this is a sign that bearish momentum's kicking into the market and we could be in for a significant price decrease. Here's it in action. As we can see, we've had a pretty good consistent bullish run. Price then starts to slow down, the bodies of the wick become smaller and smaller and smaller, and then we have a big bearish candlestick completely engulfing pretty much the last 1, 2 and 3 candlesticks. So the more candlesticks it engulfs, the stronger this reversal or this engulfment is. So as we can see here, we have a clear bearish engulfing candlestick, and then away price goes. So here's another candlestick that you need to look out for, and this is the shooting star. So again, this was similar to the one we've just showed you, but instead of being a bullish candlestick, this is a bearish candlestick, showing that price may be then decreasing. So in this hourly time frame, so again, let's assume that these candlesticks are showing an hour's worth of price action. We can see that within the hour, price has been forced all the way up. People think that this is a positive sign, but before the hour finishes, price has then been forced all the way down by the sellers. Sellers have kicked in, forced it all the way down, and price has merely closed pretty much where it left off, and then the sellers kick into the market and force the price down. So again, this is a good telltale sign of a reversal, so do keep your eye out for a shooting star candlestick pattern. A doji, this shows indecision in the market. So as we can see here, there is barely any movement with these doji candlesticks. Price opens pretty much where it closes, and there is equal length of the wicks either side, showing that price has equally gone as high as it has gone low, and it's closed pretty much where it started. So we can see it here, we can see it here. There is barely any movement within this candlestick. So there is no clear selling or there is no clear buying. Price doesn't really go either way. So this shows indecision and doesn't really show whether it is buying or selling going to kick into the market. So be aware of these when you enter trades. If you see an indecision bar like a doji, then maybe hold off until you see some more positive or negative reasons to jump into a trade. So now we're going to put together some candlestick patterns with some technical analysis strategies that we've already been through. So we're going to put together some candlesticks with support levels. So when these are combined, what do they mean and how strong of a reason is it to take a trade based off it? So as you can see here, we have a clear level of support, a region where price doesn't want to break. It's come into this zone multiple times and bounced up higher. It's come into this zone multiple times and bounced up higher, acting as a floor. And this could be something that's happened 2 or 3 times. It could have happened 7 or 8 or 9 times. The more touches, the stronger this level is. Now, as we can see here, we have a hammer candlestick dead on this support floor here. So the support floor again acting as a floor, price has come into this floor, price has then closed as a hammer candlestick, which again shows a sign of a reversal in the market and a potential positive run. So if you entered your trade after you've seen this hammer candlestick, after it's touched the support floor, as you can see, if you entered your trade here, you would have been hanging around break even momentarily before price then eventually starts shooting up. So another example of a support floor, but this time with a bullish inside bar. So that screen, that print screen that you took earlier of the bullish inside bars, the bullish engulfing bars, here's an example of a bullish inside bar on a support floor. So again, another region, price simply wants to bounce off. Again, another floor region, and what we're seeing here is inside bar after a bearish run. So price has been decreasing into this support floor. We've then had a bullish inside bar, and then shortly after this you'd expect price to then make its way back up to the previous highs in and around this region here. So let's flip it over and let's look at some candlestick patterns with resistance levels. So for those of you that have been through the previous videos, you'll know that a resistance level is essentially a ceiling. It's like support, but instead of being below price, it's above. So here we can see a clear resistance level, an area which price has struggled to break higher through and has come up to try to break higher through many a time and failed. So we've had 1, 2, 3, and then multiple times around this region. Now what we can see here is a shooting star. So again, for those of you that print screen this, please refer back to the image you took a screenshot of, and you can see that right on this resistance region we have a shooting star, which is showing that price has been forced into this zone. Sellers have forced it all the way back down, and it's closed pretty much where it opened, suggesting that price will then begin to make its descent afterwards. So these candlestick patterns, coupled with your supports and your resistance, your channels, whatever strategies you're using, it's a great extra confluence to add to your analysis, to your research, to then strengthen a reason to take a trade. Hope you've all enjoyed this video, guys, and I hope it's all made sense. As usual, please, if you have any questions, do get in touch. We're more than happy to help you out. The next video will be a little bit more in depth, again, piecing everything we've learnt together, and soon we'll be at the end of the beginner's journey, and we'll open an intermediate group where all intermediate type of education will be posted, and you'll be able to further your education and start building on what you've learned already.